Hi everybody, Renegade Investor here, and today we are talking about 9 reasons why I believe Bitcoin is going big time bull as we go into 2020 and why it's likely starting a new multi-year bull market where we could see price action head towards 100k and $1 trillion plus market cap. Whilst this statement may seem hyperbole to some, this video will explain many reasons why I personally believe this type of price rise and adoption is possible going forward. This video is a spiritual successor to my video 10 reasons why Bitcoin will destroy all-time highs in 2017, which it did in spectacular fashion. And whilst a lot of the reasons I listed in that video are still relevant today, the geopolitical macroeconomic landscape is always shifting, and there are new and strengthening core fundamentals that continue to paint a very bullish picture for Bitcoin over the next few years. Whilst the 2018 Bitcoin bear market saw an over 80% decline in the Bitcoin price, wiping around $250 billion off the total market cap and leading many in the mainstream to believe once again that Bitcoin was crashing never to recover, most OGs know that it takes more than an 80% market drop to kill Bitcoin, and this still did not stop it from being the investment of the decade. In addition, what made this bear market unique was that it happened on the backdrop of a lot of good news and strengthening fundamentals, which is perhaps the reason we have seen such a strong rebound in the last several months from what I believe was a massively oversold level. And it's these fundamentals and technicals that we are going to be reviewing today to see just why Bitcoin is likely entering a new multi-year bull market in 2020. So buckle up and hodl on tight, because this time we are not just going to the moon. This time we are going to Mars. The first and one of the most important fundamentals I want to discuss today is the 180-degree reversal of central bank tightening, especially by the Federal Reserve, and the increasingly dovish rhetoric for more rate cuts and more quantitative easing, otherwise known as money printing, by major central banks all over the world. So why is this so bullish for Bitcoin? Because one of Bitcoin's main core value propositions is being a store of value against the devaluation of fiat currency, as well as a hedge against counterparty risk as leverage increases. Over the years, sound money advocates for both precious metals and Bitcoin have repeatedly stated that QE to infinity is inevitable without a major restructuring and debt write-down, and going into 2020, it's becoming harder to avoid this elephant in the room. You only need to look at these recent headlines and actions to realise that we are entering what appears to be a renewed cycle of lower rates and increasing central bank stimulus from already emergency levels that never normalised after the global financial crisis. In 2019, the Fed capitulated to the stock markets, lowering interest rates 3 times in a year after markets sold off in late 2018 during their quantitative tightening and rate increases, which investors were expecting to continue into 2020. In addition to this, the Fed's balance sheet is yet again growing in size after a temporary drop, as they inject hundreds of billions to try and prevent a repo crisis in what some analysts believe is the Fed trying to paper over a major underlying problem in the system, and it may be very difficult for them to withdraw liquidity from this $1.5 trillion market. Add to this the fact that the ECB has stated they will once again restart quantitative easing, the PBOC increasing stimulus both through multiple reserve rate requirement cuts and direct injections, and both the Bank of Japan and Swiss National Bank hinting at lower rates. In fact, take a look at this growth in central bank balance sheets, and it's hard to imagine how anyone can come to the conclusion that Bitcoin is not going to grow massively as a hedge and alternative to a monetary system that died in 2008. And this is one of the main reasons why I believe Bitcoin will enter a new bull market as we go into 2020 and beyond. Another big reason that I believe will push Bitcoin back into a new multi-year bull market is the long-awaited halvening, which is set to happen around the middle of May 2020. For those not familiar with the halvening, it is the name given to a process where every 4 years, the mining reward which Bitcoin miners receive for processing and validating transactions on the Bitcoin network reduces by 50%. When Bitcoin started in 2009, 50 new Bitcoins were rewarded by the network every 10 minutes, creating a large supply of new Bitcoin. In 2012, this halved to 25 new Bitcoin every 10 minutes, and in 2016, it dropped to where it currently is at 12.5 new Bitcoins every 10 minutes, which gives a supply of new Bitcoin around a 3.6% annual inflation rate. So why is the halvening so bullish for the Bitcoin price? simply because it creates a supply-demand shock every 4 years where demand overpowers supply, as the inflation rate for Bitcoin has. Although we only have 2 previous data points for halvenings in 2012 and 2016, you can see from this chart, on both previous occasions, it has been an extremely bullish event for price action. As you can see from the highlighted blue areas, soon after the halvening, the price follows the increase in the stock-to-flow ratio as the supply of new Bitcoin drops dramatically. The stock-to-flow ratio is calculated by dividing the total amount of Bitcoin in circulation by either the daily or yearly total supply of new Bitcoin. Although nothing is guaranteed, in my opinion, it is probable that we will see a similar pattern in price action following the next halvening, where the mining reward will drop to just 6.25 Bitcoin every 10 minutes and an inflation rate under 2%. Although the really explosive price increase normally happens in the medium term after the halvening event, I expect the halvening to start getting priced in as we enter Q1 and Q2 2020, as investors preempt and front-run bigger moves following the actual event. Indicators of an increasing risk of recession could also be a driver for higher Bitcoin prices in the years ahead, as it would likely increase the demand for safe haven assets that provide a store of value, which is one of Bitcoin's core value propositions. In addition to this, Bitcoin is often viewed as a non-correlated asset class to traditional investment assets, and as such, a hedge for downside risk. There is also another big reason why a risk of recession is bullish for Bitcoin, which I will come on to shortly. So let's take a look at some of the indicators which are highlighting the possibility of a recession being close at hand. First of all, starting in 2009, this is the longest ever expansion in US history without a major recession, having just overtaken the dot-com bubble of 2001 with a total length of 125 months. This in itself makes it more likely that a global recession is well overdue, but there are many other indicators that are flashing red. One of them is yield curve inversion, which began in May 2019. By the way, the following charts are authored by Jesse Colombo via realinvestmentadvice.com. So what is yield curve inversion and why is it so important? Yield curve inversion happens when investors believe that interest rates or yields will fall due to a pending recession. As a result, investors target longer-term government bonds to lock in higher yields. As demand increases for these bonds, yields drop, which brings long-term rates down, so short-term rates end up at a premium to long-term rates. This indicator is so reliable, it has successfully predicted every recession going back to 1969, and on average a recession occurs within 10 months. If the same occurs here, that would paint a target of around Q1, Q2 next year. But the wildcard here is how central banks will respond. Traditionally, yield curve inversion indicates a turning point of the business cycle, but as I talked about earlier, central banks are taking unprecedented action in terms of lower interest rates and quantitative easing to prevent the business cycle from playing out, essentially running defense for big banks and corporate entities that are over-leveraged and won't withstand a recession. But this is the second reason why a pending recession could be so bullish for Bitcoin, as a store of value hedge against global fiat currency debasement and counterparty risk. If central banks continue with their unprecedented communist-style Politburo intervention in the free market, tens of trillions will need to be created to keep the system alive, and there are already indications that they will intervene once again. This will highlight to millions more people that the global legacy financial system is in a terminal state, and many will turn to Bitcoin to protect themselves. In addition to this, if we look at Bitcoin's closest cousin gold and see how it responded during the last 2 recessions in 2001 and 2007, with the exception of a temporary drawdown in price in 2008, probably to fund margin costs, we can see that the gold price has increased massively in 2001 and 2007 as risk and central bank intervention has increased. Also keep in mind that gold is a multi-trillion-dollar market and Bitcoin as of writing sits at just $140 billion, a fraction of gold's market cap, so potential upside in Bitcoin is much greater at this point. As well as the yield curve, other recession indicators are price to earning stock valuations, which are well into historically overvalued territory, and the New York Fed's own recession probability model that is showing similar behavior prior to the recession of 2007. I will also put a link to this article showing many more recession indicators in the description below. Finally, I want to show you a good video from Mike Maloney on the relationship between the Fed's interest rate rises and cuts and how they also show that a recession could be pending.
measuring this lagging indicator. If you notice here, they started cutting just a little bit in December of 2000, and then so that's 1 month, 2 months, 3 months, 4 months before the start of the onset of the 2001 recession, they started cutting rates. And then we go out to 2007 here, and we've got 1 month of cuts, 2 months, 3 months, 4 months, 5 months before the onset of the next big recession, and this is the global financial crisis and Lehman Brothers happening right here, the stock market crash of 2008. And then they raised rates, but 1 month, 2 months of rate cuts. What is up with the world economy? You better get ready.
So whether we see an official recession or not in 2020, to me the global macro environment is looking more and more bullish for Bitcoin, either as a hedge against downside risk or a ramp up in inflationary pressures. Institutional investment is another reason to be bullish on Bitcoin in my opinion, as more established companies begin to build out the services and infrastructure as Bitcoin's financialization network effect grows. One of the most interesting developments in the institutional space with regards to Bitcoin is Bakkt. Bakkt is planning to be a one-stop shop platform and infrastructure for buying, selling, storing and spending Bitcoin with focus on institutional investors. In their own words, Bakkt is designed to serve as a scalable on-ramp for institutional merchant and consumer participation in digital assets by promoting greater efficiency, security and utility. We are collaborating to build an open platform that helps unlock the transformative potential of digital assets across global markets and e-commerce. Created by Intercontinental Exchange, or ICE for short, the company behind the New York Stock Exchange and many other commercial global and energy market technology and exchanges. Their flagship product will be a futures exchange for physically settled Bitcoin contracts, which differs to many other future platforms because contracts are actually settled in Bitcoin as opposed to US dollar. This should be a very bullish proposition for Bitcoin because as open interest and volume increases on the exchange, the more Bitcoin will be needed to back those contracts, increasing demand. In terms of volume so far on these contracts, as you can see, volume started off very subdued on launch, but has really ramped up in recent weeks. And although still relatively small, it's a good sign for future growth on the exchange. In short, this could become a key on-ramp for institutional investment in the years ahead, as it supports three of Bitcoin's network effects of speculation, merchant adoption, and consumerism, whilst providing storage solutions, and I see this as a very bullish development for the space. Next up on the institutional front is Fidelity, one of the largest asset managers in the world with around 7.2 trillion in assets under management. Similar to Bakkt, Fidelity Digital Assets, or FDAS, plan to create a platform for exchange and storage of crypto assets, and they have just been granted authorization for a trust license by our state overlords to provide these services going forward. In their own words, Fidelity Digital Assets is the first step towards a long-term vision to create a full-service enterprise-grade platform for storing, trading, and servicing eligible digital assets. This platform is built to the same exacting standards as exists in other Fidelity businesses, while incorporating unique capabilities of blockchain technology to deliver a completely new offering for institutional investors. Whilst Fidelity is currently focused on over-the-counter trading, they are looking to onboard exchanges to provide trading facilities for smaller institutional investors and retail investors as well. And with the potential of a new Bitcoin bull market near, with so much under management, this could open up a huge on-ramp for Bitcoin demand as investors succumb to Bitcoin FOMO. Another major institutional player that looks to be heading into custodial solutions for digital assets is ING Bank, a major Dutch multinational financial services corporation with assets of $1.1 trillion. As I was making this video, various news sources reported that they are looking to provide a digital asset custodial solution by 2020, which adds yet more weight that institutional players are taking this emerging network and asset class very seriously. As Reuters reports, ING sees increasing opportunities with regard to digital assets on both asset-backed and native security tokens. ING is particularly focused on developing the technology behind digital assets to give its clients a compliant way to access the emerging sector. There is also growing evidence of the move towards infrastructure inversion as the legacy financial system begins to build on blockchain rails. Another indication of growing institutional investment in Bitcoin is the Grayscale Investment Trust, founded in 2013. It offers investors a way to invest in multiple trusts, and they have recently posted their Q3 2019 report, which shows record inflows. From their report, you can see that inflows were at $250 million in Q3, which marks the strongest demand since the firm's inception, and inflows have tripled quarter over quarter. And from their Bitcoin trust, you can see they totaled $171.7 million, which was the heaviest quarterly inflows to Grayscale in the product's 6-year history, including $75 million in a single day. And the really interesting thing here is that volume and inflows are sometimes exceeding the highs previously posted at the all-time highs in 2017, during the peak euphoria stage of the Bitcoin market cycle, when Bitcoin hit $20,000 per coin. So these are just 4 examples showing a positive trend in growth in institutional interest investment in infrastructure that could support much higher prices in the years ahead for Bitcoin. As a bonus chart, have a look at the Buy Bitcoin search term on Google Trends. We can see that as Bitcoin hit its capitulation lows of around $3,000 back in late 2018, in Q1 and Q2 of 2019, the 300% rally that took us back up to 14,000 happened on the back of a fraction of the interest from retail investors highlighted by this chart. That's not to say that retail investors will not return, but it's more evidence that the latest price spike and accumulations were institutional and bigger investors beginning to position ahead of what will likely be a multi-year bull market as we enter 2020. And as liquidity grows once again, perhaps even over the $1 trillion market cap this time, the growing liquidity will allow yet even bigger institutions to start taking positions in Bitcoin. One of Bitcoin's network effects I find very interesting is its global strategic asset network effect. In my opinion, Bitcoin is more powerful than any government, central bank, or corporation combined. And as we enter 2020, it is becoming more evident that these entities are really beginning to realize this fact. As Bitcoin's market cap, price, and influence climbs over the next few years due to all the other reasons listed in this video, Bitcoin is very soon going to become a global strategic asset as game theory ensures that governments will compete over Bitcoin on mining, accumulation, and regulatory arbitrage. The reason for this is that as much as they hate Bitcoin, they simply won't have a choice. This has the potential to be a huge and important fundamental that drives the Bitcoin price to highs that would seem impossible from current levels. Bitcoin in late 2017 hitting $20,000 and a $300+ billion market cap was a warning sign for centralized institutions that have bastardized the legacy monetary system to the point of collapse, and it has not gone unnoticed. First off was this statement from Congressman Patrick McHenry calling to allow free innovation in the cryptocurrency space and an admission that the Bitcoin blockchain has become an unstoppable force.
The reality is, whether Facebook is involved or not, change is here. Digital currencies exist. Blockchain technology is real. And Facebook's entry in this new world is just confirmation, albeit at scale. The world that Satoshi Nakamoto, author of the Bitcoin white paper, envisioned, and others are building, is an unstoppable force. We should not attempt to deter this innovation, and governments cannot stop this innovation. And those that have tried have already failed.
At the other end of the spectrum was this speech from Luddite Congressman Brad Sherman, who calls for the stifling of open innovation and the free market by calling for cryptocurrency purchases to be outlawed for Americans. He also acknowledges the absolute power of Bitcoin by stating that Bitcoin could be weaponized by other states against the hegemony of the US dollar.
For colleagues to join with me in introducing a bill to outlaw cryptocurrency purchases by Americans so that we nip this in the bud, in part because not an awful lot of our international power comes from the fact that the dollar is the standard unit of international finance and transactions. Clearing through the New York Fed is critical for major oil and other transactions, and it is the announced purpose of the supporters of cryptocurrency to take that power away from us, to put us in a position where the most significant sanctions we have on Iran, for example, would become irrelevant. So whether it is to disempower our foreign policy, our tax collection enforcement, or our traditional law enforcement, the purposes of cryptocurrency, the advantage it has over sovereign currency is solely to aid in the disempowerment of the United States and the rule of law.
Ignoring his audacity to say that Bitcoin undermines the rule of law when not a single banker was arrested after 2008. This is an admission by the US government that they are beginning to view Bitcoin as a viable threat to the global hegemony of the world reserve currency, and with that, other fiat currencies. Let that sink in a minute and realize how bullish a statement this is for Bitcoin. Although these two congressmen are coming from completely different viewpoints, the message is the same. Bitcoin is an unstoppable force and they know it. As a result, governments are moving more and more into their blockchain not Bitcoin phase, which is always a precursor to finally admitting that Bitcoin is going to be the unofficial global standard. All around the world, governments are fighting rearguard action by trying to create new payment systems to compete with Bitcoin, from the Fed in the US to the ECB to the People's Bank of China, France, and the Bank of England, with Mark Carney stating that a global central bank cryptocurrency is needed. But there is one big problem here for all these entities, and that is centralized systems cannot compete with Bitcoin because of these main reasons, which you can watch in more detail in my video, 9 reasons why Bitcoin will outcompete private blockchains, especially as we enter a multipolar world, as pointed out by Michael Krieger in his article, The Old World is Dying, in which he states, I think the next several years will be characterized by a consistent escalation in tensions between a US desperate to hang on to global imperial hegemony and rival powers committed to solidifying a multipolar world. In other words, this isn't simply an attempt to reorganize trade between the US and China, rather it's one piece of a much larger historic competition to define what the next great paradigm of world history will look like. The old world is dying and a new one is being born. Expect plenty of chaos in between. In addition to this, just take a look at the level of innovation and development that is happening in Bitcoin around mining, privacy, sidechains, layer 2 which includes scaling, smart contracts and performance and usability. In my opinion, it will be next to impossible for any government or government entity to compete with this level of open innovation and growth when there is a limited amount of developers that can operate at this level and they can't be bought. So why is this so important to point out, and why is it going to be so bullish for Bitcoin over the next few years? Because it's all leading to Bitcoin's recognition as a global standard blockchain and thus a global strategic asset. We have a perfect storm of macro events playing out. As a bonus, check out the level of gold buying by central banks that just hit the highest level since Nixon closed the gold window in 1971, and the growing trend of gold repatriation as countries reclaim ownership from their overseas holdings. It tells us two things. Sound money is back in vogue and trust is breaking down between countries. And what does Bitcoin facilitate? A trustless, decentralized sound money alternative. These are the growing signs that show Bitcoin is positioned perfectly to become a global strategic asset in the near future, which in my opinion is very bullish. 2020 is looking to be a prolific year for financial and political censorship, which will likely be carried out by big tech and big finance under pressure from political and government entities in the background. The two main reasons for this is that it's an election year in the US, and on top of this, there is growing global political tension across the world. The reason why this will be bullish for Bitcoin is because one of Bitcoin's main value propositions is that it provides censorship-proof transactions regardless of the end user, as it has the ability to be used like digital cash that disintermediates all middlemen, an extremely powerful attribute in a time of peak centralization and control. Before we get into this, I am aware that restriction from a private platform can't really be classed as censorship, but I will be using this term in general throughout this segment to explain the systemic deplatforming of a certain group of people that has really been gathering pace since 2016. So why was 2016 onwards such a prolific year that ignited so much financial and political censorship and an attack on free speech? Because it's the year where the powers that be, which I would classify as nation states, the financial elite, the military industrial complex and the mainstream media, realized they had lost control of the narrative. The three main indicators of this was the election of Trump in the US, the prevention of another overseas conflict in Syria due to a chemical weapon false flag attack, and the Brexit vote in the UK, which may be a catalyst for the demise of the communistic European Union. One of the main driving forces behind the loss of narrative and who are now under attack is the alternative media on social media that has grown in influence beyond the mainstream media. As we come to the end of this monetary and political paradigm, nation states that have grown in power and overreach for decades are becoming increasingly pressured to quieten any dissent that is causing political upheaval to an ever more fragile system as they become increasingly indebted and bankrupt. Political and financial censorship of conservative and anti-establishment commentators by left-leaning pro-establishment big tech and big finance has been well documented over the last few years, from deplatforming across all major platforms to YouTube demonetization, to deplatforming by funding sites like Patreon and PayPal and also banks. And this looks to be escalating even further into the offline world, demonstrated by the recent freedom movements in Hong Kong, where millions of dollars were allegedly freezed in an account held at HSBC. As protests across the world escalate due to the death of the rule of law and inequality escalated by massive central bank intervention in the markets, financial censorship looks set to explode, which will leave many looking for ways to transact outside of the legacy financial system, as News BTC states. Following the recent freezing of around US $9 million of donations to the Hong Kong protest movement, demonstrators have now turned their attention towards financial censorship. With hostility against the banking industry rising, Bitcoin as a censorship-resistant asset may well stand to benefit. And this in itself may put Bitcoin commentators in the firing line of big tech, as during the making of this video there was a purge of Bitcoin videos, some going back several years, that had apparently violated YouTube's terms of service, despite in many cases being made by highly reputable users and often just providing simple educational videos on how to use various Bitcoin services. Whilst YouTube stated that the Bitcoin purge was a mistake, instances still seem to be happening, but it remains to be seen how far this will go, and is something I'll be monitoring as a YouTuber myself. But it's worth pointing out at this time that there are many alt-tech sites growing that can provide more decentralized free speech alternatives. Finally, as we enter election year in the US as well, which will likely lead to more prominent people in the alternate media being cut off from their income and platforms, it will lead millions more people to realize the power of Bitcoin as the only genuine, decentralized, global level playing field, censorship-proof platform for transacting. And this is another reason I am so bullish on Bitcoin going forward. Another key factor that I believe will drive the Bitcoin price as we enter a new bull market is returning retail investment and adoption. Whilst the Bitcoin price may have been in a bear market over the last 2 years, the infrastructure and major platform options for purchasing Bitcoin have been growing all the time, ready for the next wave of adoption. And I have no doubt that once we approach and clear all-time highs catalyzed by the halvening and all the other fundamentals listed in this video, retail is going to return in a big way. So let's take a look at why this is so bullish for Bitcoin as we enter a new bull market and the potential this may have on the price. First off, Square. A recent tweet by Alistair Milne turned a lot of heads with regards to the halvening, as he stated that California-based Square and the GBTC Grayscale Investment Trust alone, discussed earlier in this video, could be responsible for absorbing over 50% of all newly mined Bitcoin post-halvening, when supply drops from 1800 Bitcoin to 900 Bitcoins per day. It's hard to overstate how bullish this is for the price and how limited in supply Bitcoin will be. And if we look at Square's Bitcoin sales per quarter, they are picking up fast as we enter 2020, especially in dollar terms. In fact, year-on-year growth is at 250%, and this is whilst Bitcoin remains relatively outside of the news cycle after a long bear market. Another major retail exchange, Coinbase, has also been showing strong growth in user numbers despite the bear market over the last 2 years. As you can see from this chart, whilst user growth has not matched the parabolic wave of adoption we saw in 2017, growth has still been strong and on trend, adding 8 million new users in the last year. I expect user growth on Coinbase to accelerate rapidly over the next 2 years, which I expect will drive demand and prices once again to the upside. Moving on, TD Ameritrade, which provides investing and trading services for 11 million client accounts that total more than 1.3 trillion in assets, and custodial services for more than 6,000 independent registered investor advisors, has responded by demand from its clients to provide exposure to digital assets on its platform. The firm has placed an early stake in ErisX, a cryptocurrency trading platform with the ability to provide Bitcoin futures that, like backed, will be physically settled. The importance of this again is that as retail demand grows from these brokerages, the future contracts will need to be physically backed by Bitcoin, driving demand and offering yet another on-ramp for retail investors. Another company that has entered the Bitcoin space with its 10 million plus user base is social trading network eToro, which over the last 2 years has created a crypto trading platform that allows for trading and direct investment in Bitcoin and other cryptocurrencies. Created during the bear market, it will be interesting to see how investment grows on this new on-ramp as we enter the next bull market and the next parabolic wave of user adoption. Regardless of which way you purchase Bitcoin and how much you buy, the safest way to store Bitcoin is to pour the Bitcoin off the exchanges where they are exposed to counterparty risk and into a hardware wallet such as a Trezor or a Ledger wallets for safe storage. This way you have full control over your coins and it massively reduces risk. In addition, always remember to buy these hardware wallets from the official site and not third parties where the devices could have been compromised and tampered with. If you are interested in buying these highly rated wallets, there are also links in the description below that will take you straight to the official sites where you can purchase a wallet and support the channel as well. So to wrap up this section, the main point here is that infrastructure on-ramps and ease for retail investors to access Bitcoin is growing by the day, making it easier, more accessible and safe to invest. And as all the other fundamentals listed push prices to the upside, retail is going to come back big and act like a supercharger for the price during the next parabolic wave of adoption. This next section is all about really interesting statistics and charts I've come across that don't really fit into the other sections in the video, but are very much worthy of mention and highlight why there are just so many reasons to be bullish on Bitcoin in 2020 and beyond. First off, and perhaps one of the most bullish charts I have found, is this chart that Rhythm Trader on Twitter made me aware of, available at bitinfocharts.com. The chart shows the cumulative sum of Bitcoin in dormant addresses that have not been touched for over a year. It currently sits at a staggering 11,580,000 coins, despite an 85% price increase over the same period. So why is this so bullish? Because it shows us multiple things. First, it shows that although there is just over 18 million Bitcoins in existence, the amount in circulation or the float of Bitcoin being actively used and available is actually relatively small. This means that any big jump in demand from all the reasons highlighted in this video is going to completely overwhelm active supply, and price will have to go much higher before holders will part with coins. And this doesn't even take into account lost coins, that is estimated around 2 to 3 million, and greatly reduces that 18 million total. Secondly, it shows that a lot of people believe that Bitcoin is severely undervalued and oversold at current levels and trading at a discount to its fair market value or predicted future fair market value, as they are not willing to sell at these current price levels. And thirdly, it shows that the bear market has again moved a significant amount of Bitcoin from high time preference weak hands into low time preference strong hands in it for the long term, which is a prerequisite for a renewed bull market. Whichever way you look at it, it's definitely one of the most bullish charts I have seen. The next statistic and chart showing a bullish signal is the mining hash rate, which has just hit fresh all-time highs in 2020 and continues to climb, having recently hit 120 exahash. So why is this indicator so bullish for Bitcoin, and why can we expect things to escalate in a big way going forward? Why? Because of Bitcoin's mining network effect. In this case, the increased hash rate is showing three things. First, it shows that Bitcoin miners are confident that much higher prices will offset the 50% reduction of the Bitcoin mining reward during the halvening event in May 2020, and they are confident about future growth in Bitcoin network transaction volume. Secondly, it provides bullish optics for institutional and retail investors that Bitcoin is consolidating itself further and cementing its place as the dominant global blockchain. And third, it shows a bullish price signal, as investment often follows the mining hash rate because of increased security of the network to any potential 51% attack. Essentially, investment and Bitcoin price follows increased mining and vice versa. As I explained in my video, altcoins versus Bitcoin, why Bitcoin's network effects will make it a monster, based on Trace Mayer's 7 Bitcoin network effects. As more people mine Bitcoin, the more secure the network becomes, creating more trust in the network and attracting more investment. As investment increases price, more mining is incentivized, making the network even more secure. Next up, we have the Mesa multiple chart, one of my favorite sentiment indicators, which shows a multiple of the Bitcoin price over the 200-day moving average. Used as one way to determine if Bitcoin is trading at a discount or premium to its fair market value, the current Mesa multiple at the time of creating this video is 0.86, with a Bitcoin price of $7,923 and a 200-day moving average of $9,211. Interestingly, however, historically the Mesa multiple has been higher 77% of the time. In fact, if we look at the historic average for the Mesa multiple, which is 1.47, then current price would need to be around $11,000 to fit the average in this model. This tells me as an investor that this bear market has overrun and Bitcoin is trading at a discount based on historic data and that it's a good time to buy. In fact, if we look at the range of what the Mesa multiple can hit during a multi-year Bitcoin bull market, which I'm expecting over the next few years, the Mesa multiple has seen highs of 6 to 8 times Bitcoin's daily moving average. So to me personally, this chart is bullish because it shows that there is likely much more upside potential at this point than downside risk, and it's definitely an indicator to pay attention to. The next chart I want to show you, which paints a bullish outlook for Bitcoin in the near future, is Bitcoin mining difficulty adjustments. Before I explain, thanks to Nunya Business at Pladizo for sending me this. If we take a closer look, Pladizo states that there has only been 8 months where the mining difficulty adjustment was lower than the prior month, and most of them have marked major bottoms in Bitcoin. If we look at the last few, you can see it occurred around the 2018 lows as we approach $3,000, and recently on the pullback to $6,400. Whilst nothing is guaranteed, based on previous data, this indicator could be marking the lows before we rally into the halvening and beyond, and yet another sign that the potential upside in Bitcoin far outweighs downside risk at this point. Another chart provided by Pladizo that supports this hypothesis that current upside potential in Bitcoin outweighs downside risk is this one that shows that on both prior major bear market lows in the past, price often spikes up before retesting a price 2 times that of the low, which has confluence with this green nonlinear regression curve. And as you can see from this chart, we have recently seen a similar pattern for the 4th time as we go into 2020. Next up is the stock to flow chart that we looked at earlier, because it's one chart I want to re-emphasize, as the halvenings in 2012 and 2016 shown by the yellow circles shows how much price action can go to the upside post-halvening events. If the pattern was to repeat following the halvening, and it follows the stock to flow model as it has been since inception, it would not be unrealistic to expect a 6-figure Bitcoin price in the not too distant future and $1 trillion plus market cap for Bitcoin. And for all those that think it's impossible or sounds unrealistic for Bitcoin to hit these levels from its current $150 billion market cap, the final statistic I want to highlight is the fact that for Bitcoin to hit 100k price and $1 trillion, it only needs to hit around 0.4% of the $400 trillion there are in all other major asset classes, in a world where every central bank seems determined to destroy fiat currency by doing QE to infinity. And this is why I personally think that there is no other investment or major global asset in the world right now with this type of upside potential. So the last section I want to talk about today is the technical outlook for Bitcoin, which is beginning to look more bullish as we enter 2020, and will feature analysis by special guest Crypto Hustle, an experienced cryptocurrency trader and investor. But first, following on from this chart which we reviewed in the last section, I want to start with a 12-month Bitcoin price forecast by Phil, a trader I've been following for a while and whose analysis is good, and one of the few traders that have predicted very accurately the 2018 bear market. You can find him on Twitter, YouTube, TradingView, as well as his Telegram channel. But as you can see from his 12-month forecast, it supports the thesis that Bitcoin is in another short period of reaccumulation, having retested that 2x pullback zone before an expected move higher this year into the halvening event. And as you can see from this updated chart, the price has been following his forecast closely. And if it continues to, we could expect to see another leg up in the price as we go into Q2 2020. And here to talk about the current technical outlook and break it down in more detail is another trader and investor I really like and respect called Crypto Hustle. You can find him on Twitter, YouTube, and he also joint runs skillincubator.com with Chris Dunn, a paid trading mentorship group that I have personally been a member of for several years. And if you're interested in joining, there is a sign up link in the description below as well that you can check out.
Crypto Hustle here to do a quick market analysis on Bitcoin. As we can see in the last market cycle, it ended like many market cycles with a parabolic blow off top. How you can tell is that the angle of the trend went straight up vertical, which makes it unsustainable. Basically means there's not enough support and enough buying demand to actually hold the price up at that level. So it was kind of hot air as it went into a speculative frenzy leading up to the launch of CME futures, right? Then it crashed. What goes up must come down. So it hit some hard counterforce. Then we saw a series of lower highs squeezing into a descending triangle, which was the bear trend of 2018. And then we hit some counterforce on the downside. As it broke that 6K support line, we snapped, capitulated, and then had a very quick accumulation cycle, much faster than we had seen in 2015. When we broke out of this ascending triangle, this accumulation pattern down here, we had a very aggressive rise up, 3 drives up, and it kind of a little bit of a mini parabola. So it's no surprise that we had a much deeper correction. If we were to draw a fib retracement, we can see that it actually retraced back towards the peak at the 0.618 retracement level, which is very aggressive compared to the previous cycle. It had taken a lot longer for that to happen, right? So the first breakout zone that we had this this double bottom accumulation pattern down here, and then when we broke out of that, pretty much just went up 2 fib levels to the 0.38 zone. And then there was about 6 months of consolidation on this ascending triangle right here. And then finally, when we broke that, that's when we made it to the 0.618. But you can see there's also a very deep correction here. Now, in the previous market cycle, one of the deepest corrections that we had was, close to 40%. It was about 38, close to 40% off the top here. Whereas the one we just recently had was much, much deeper than that. We had a 53% correction. Now, in the previous market cycle, Bitcoin had not had a 53% correction anywhere else in the previous market cycle. So this is the deepest correction that Bitcoin has had in a long time, aside from being in a bearish market structure, right? So since my hypothesis around that is because we had gained so aggressively and shot straight up 4 fib levels up right off the bat in a very short period of time over the span of a few months, naturally the pendulum had to swing and hit counterforce with an equal amount of force in the opposite direction, which explains why we had a much deeper correction, right? Now, once we broke market structure here, once we broke this this trend line right here, we did start to produce lower highs and lower lows. So the second half of this was a bearish market structure. However, in my opinion, that doesn't necessarily equate this to a bear trend. It has been bearish market structure, but we could still be in phase 2 of a larger bull trend. So we're kind of on the cusp right now. And there's a few reasons why I say this. Right now we're moving into the halving coming up this summer. Bitcoin market cycles historically have been revolved around the halving. And basically that's when the emission supply gets cut in half. So there's less supply hitting the market from miners, which is less selling pressure. Miners don't necessarily have to hold Bitcoin to acquire Bitcoin, or they don't even necessarily even have to like Bitcoin. They could just buy equipment and instantly market dump it, so on and so forth. So that kind of reduces that pressure, that selling pressure. And then with Bitcoin, as you get into a new technology, you reduce the selling pressure from miners and increase the technological user adoption. Historically, this is what's been driving the market cycle. It's the supply and demand dynamic. Also, you have to look at the overall market cap of Bitcoin. I personally believe that it could at least reach a multi-trillion-dollar market cap, or at least $1 trillion. That's just my own personal opinion. So I don't think we've hit that market saturation point on the S-curve of user adoption just yet. So here's what I would look for as far as a recovery to get out of this recent bearish market structure. We've already made a couple of interesting signs here, and the retrace that we had recently, you can see that it retraced almost to the 0.618 zone, kind of a sweet spot, right? A little bit deeper. We had an inverse head and shoulders that we just broke out of, and we also broke out of this descending trend line. So Bitcoin was in a bit of a channel here, right? And I actually like the market structure of this a lot better than this. This was like straight vertical up, straight vertical down. 10K has been a magnet area, right? There was a resistance point here. 10K has been a magnet area. You can see it's around this fib level right there. What I mean by magnet area is that the price gets attracted to it, and it spends time over the 10K region, under the 10K region, right? Over, under. The reason for that is because 10K is a strong psychological number. It's like when Bitcoin hit $1,000, that was a strong psychological number. It was 4-digit Bitcoin, right? We need to conquer that number. Price discovery needed to establish demand at that level, right? The first time we had broken that level over here, it was pure hot air and speculative demand. There was no real demand for Bitcoin at that level. It went up straight vertical, and then it crashed down straight vertical, and we hugged the 6K zone for the longest time. What I like about this market structure, it's a little bit more wider and less vertical, and we've actually been kind of going over under this 10K region, right? So we've already had 2 breakout points recently. For further confirmation, you can kind of see we're also at a slight resistance point right here, where that resistance was. So there were some profit takers in through there. And so for further confirmation, for this to make another leg up as a phase 2 on the overall bull trend leading into the halving, in order for that to happen, we need to conquer this 10K area right there. Once we conquer that 10K area, and if we could push over again, then in my opinion, that is confirmation that the bull trend is back in action and that we're regaining momentum. In the event of that happening, just use a little bit of a fib extension. The next major target zone that I would look for before we hit some resistance would be that 100% extension level right around here. Let's say close to the 17K zone, which is where you had that dead cat return to normal on the last bubble. So that would, in my opinion, be the next major point of resistance if we can clear this resistance here. If we can clear 10K, then challenging this point of resistance mid-range, I think, is quite feasible. And then perhaps we might replicate something like the end of 2016 or the beginning of 2017 where we challenge the all-time highs after the halving. And then once we break it, well, then the rest is history. We're in a new market cycle if that were to happen. I'm leaning towards that scenario. I mean, altcoins have been smashed into the dirt overall, so they're overdue for counterforce, in my opinion. Many have done full retraces, etc., etc. So the overall crypto markets, and we'll see if we can't break that zone. The bear case scenario, what I would watch out for is if we ended up cracking below these 2 lines here, then that wouldn't be good, right? We have to hold up above these 2 lines. If we ended up cracking down below here, then there's a possibility we're gonna have to revisit that historical 6K support. So I'll leave it at that, folks. Hope you enjoyed the video. Cheers.
So thanks to Crypto Hustle for that great technical analysis, and that concludes 9 reasons why Bitcoin is going big time bull in 2020. But as we enter the next bull market, remember these important points. Bitcoin is very volatile, so keep a low time preference. Invest only what you're comfortable with and could afford to lose in a worst case scenario. Never buy Bitcoin by taking on debt, and remember to do your own research and do your own due diligence. With that said, in 2020, as the world's central bankers recklessly destroy free market capitalism and nation states run endless deficits, there is a perfect storm of macroeconomic and geopolitical factors creating the perfect environment for Bitcoin to dominate. A paradigm shift of epic proportions as empire, globalism, centralization and fiat currency die, and people move towards decentralization and financial sovereignty. Anti-establishment sentiment is rising across the world, and during this transition I can't see any investment right now that has more potential than Bitcoin. Bitcoin not only offers protection against the reckless actions of those that have brought this system to its knees, but as a way to prosper as the legacy system diminishes. Bitcoin is the shining light that humanity needs so we can rebuild our money on top of a secure, fair, trustless level playing field, and to move away from this rigged system. No longer will we silently and insidiously suffer under the long-term effects of inflation. Instead, we will go into a future without war, financial oppression, debt servitude and counterfeiting. And in my opinion, 2017 was just a warm-up. At $150 billion market cap and a 0.03% share of all major global assets, Bitcoin is still a fraction of what it can grow to be. It's time for Plan B. It's time for Bitcoin. So,
let's go to Mars.